Hello, welcome back. This is the full review since September to basically end of September to end of March. Um, really, it takes into account. So I had the first quarter, which was basically from end of September to around it was end of September to middle December, and then after that, I had like from middle December to middle January. That part, I was still doing some videos, but it wasn't really. It was kind of just the middle period. Then I added new funds, and then I did it again from middle January to end of March, and that was the second quarter review, or the other performance review. And so there, you can see kind of just only that data being considered. And in this video, it's going to be all the data. So every single day, basically from end of September to end of March. All right, so let's go total performance, right? So here, let's go section by section. So from September to basically, really, you could say end of January, it was pretty consistent, right? Or even up till here, middle February, pretty consistent. We had some down here, then some up, and you would be around the 11%, right? And then here, so here I decided to switch sectors here, and then this led to a big fall, and I was also over leveraging, so then that didn't go too well. And then I kind of left the position around here, and then so I went back into the same sectors that I did from here to here, and I started that around here. And then you can see I started to go back up. So here was kind of a very big dip. I mean, we were probably around negative 4 or 5% overall, which is not very good. And then we started to come back up, and then we went back up, and then a little down, and then all the way back up again. It's important to note that around here, because I over leveraged, I had to come back with also more leverage, which is more risky. But then I did come back, and then when I was back to around where I was before, I went back to like a 60-40, and where the 40% is leverage and the 60% is non-leveraged. And I did that, and then we ended around here, which is close to above 30%. So let's continue. So yeah, it was a new all-time high. This is the money graph. So you can see it's not as high as the percentage graph, but it's still a new all-time high. And then here you have NASDAQ. So NASDAQ is the blue line. You can see really we were basically following it. We were outperforming by quite a lot over here. And then now you can see it's almost to our nearest low. It's almost hit our lowest point. So over here you have this was a very big drop, but in the end NASDAQ did a similar drop. So we did eventually recover a lot. And then this drop also, I was also testing different ETFs here. They were basically the same sector, but there are different ETFs. So that resulted in more volatility, and then it did result in more gains. But my idea is to go back to around here, and this part I was mostly in, some SPY, NASDAQ, some semiconductor stuff. Here I switched a bit more. So my idea is to go back into those, and then we'll have less volatility, and then the gains should still be around this level, which is pretty good. So yeah. So over here we have the total outperform days, so 50%. So that's pretty good. And then NASDAQ has returned a negative 4% since I started. So you can see it's 36% outperforming NASDAQ, which is quite a lot. Over here you have the S&P 500. So the S&P 500 is also getting kind of there. It's around that level. It's getting there, but it's not as low as NASDAQ. So you can see here it's a -3, not -4. So we're 35% outperforming SPY, and then also I outperform 50% of the days. Here you got Dow Jones. So Dow Jones is actually the best choice to go in, even though it's mostly it's the least volatile. So in bad periods or bear periods, it's the one that's normally gonna fall the least. Then NASDAQ's gonna fall the most, and SPY's in between. Over here, I mean, you can see it's still not really hitting a new low, but it's getting there. So it's -177, and then we outperformed actually 51% of days for Dow Jones. So this is a daily percent goal graph. So my goal is 0.17. At the moment, we're at 0.25, which is very high. And you can see kind of how the volatility started to increase here. like the spreads get bigger and bigger. So you know the idea is to try to go back to around over here. You can see really until mostly since September to all the way to um, around mid-February, start of February. So yeah, and then here it's kind of the different sectors and stuff. All right, so here's the comparison of all. So you can see got Nasdaq, SPY, then Dow Jones. Really, I mean, if we're looking at the whole thing, here was kind of down, and then we went back up. We were following it, and then when I ended, we were basically at the same level as Nasdaq. Then we kind of continued going up. Then I profited on the fall over here, dropped a little because it went up, and then it was kind of acting as a short because I was mostly short. So then when it goes up, you can see I kind of go down, and then here when it went down, I went up a bunch, and then which was the DeepSeek stuff. Then I was kind of in the middle here, and then I was like thinking right now is not the best time to go into this stuff because there wasn't much money to be made. So I was like, I'll switch it up, and then that didn't go very well. And then when I got out, it started to fall a bunch. So then I profited off of that really quickly, and I gained a lot. And then you can see on this recent fall, I also gained a bunch, recovered most of the thing. As in this position, I was just holding. I was mostly holding. Well, I wasn't really holding. I was holding during the day, and then I kind of sold at night. But I was holding like the same stuff. I was just kind of waiting for the week because the week here it started going up, then it flattened, and then it fell down and ended negative. So that I was kind of just waiting for it to end negative, and then that resulted in this volatility, which is quite a lot. So at the moment, I think my plan is to go back to like keep on with the 60/40, but just with these sectors, and I should be fine. Over here, so there's around 20 more green days than red days, and we have very little neutral. It's also important to like know how much you're losing and winning on your green and red. And also how many profitable trades. So we're around 70%. The overall, the mean gain is 1.85, and the mean loss is negative 1.56. So you can see we're gaining more days, which we have more green days, and we're gaining more on those days than the losing days. So you normally want to, you can have more losing days, but if you're losing less than what you're winning, then you're okay. That's the idea. Standard deviation did increase by quite a bit this time. Before it was around 1 something, now it's 2.76. And this was mostly because of that big recovery I had to do. And that this was going to increase, if I wanted to recover, this had to increase. So it had to go up. Over here we have the standard deviation, the mean gain and loss for SPY. So here's kind of what I mean where SPY does lose more than what it gains. Now this is kind of the period that we're in is more bearish, I'd say. So this number is going to be greater. It has gained more days than lost SPY, but you can see overall it's still negative 3%. So this kind of makes sense. Standard deviation 0.88. And then over here you have the total. So this is basically the ratios. So my average win divided by my average loss, and then SPY's average win divided by SPY's average loss. And the idea here is to see, are you winning and losing respectively the same as SPY? So are your ratios the same? And you can see they're actually better than SPY. So the amount we're winning more than what we're losing in comparison to SPY. And you can see here our losses could decrease by 0.3, or our gains could actually decrease by almost 0.5, or yeah, 0.5. So really we have a good margin right now, and I kind of want to keep it like that. So our difference is positive, and our standard deviation is 3 times greater than SPY's. I'm expecting this to decrease. Normally, if I do another quarter in the next coming 2 weeks, I would expect it to be around 1 to 2 times greater. So okay, so this is what I've been invested in, right? So you have a variety of ETFs. These are all ETFs, right? You got QQQ, SPY, SOXL. So you have leverage semiconductors. Then you have Apple, Amazon. Here's the nat gas that caused the fall. Here you have IWM, Nvidia shorts. You have the VIX. And then here's some crypto stuff. So really, you can see the majority is in semiconductors, and then you also have SPY. So you can kind of see I did trade this for almost the majority of everything except the last like month and a half, and the month and a half was mostly these things. Um, but my idea is to go back to, going back to the semiconductors, the 3x IWM. You can also go back to the SPXL. I don't think it's here, but you have XPXS, which is a SPY short, a leveraged SPY short. You also have, what else? Do have NVIDIA shorts, right? And yeah, so that's my idea. And then these are the profitable trades from each of the ETFs. So here you can see how, each one, most of them are above the 50% line, which is good. So there's around two problems with this though. It doesn't show your average gain and loss for the ETF. So like here, for example, I think I lost around -5, but then gained like 12. So overall, I'm still positive on it. Some other ones have very little sample sizes. Like I think some of these full green bars only have like one or two trades. So normally you want to have high sample sizes, and the ones that do, I'd say, would be like SOXS and the SPY stuff, and those are above the 50, and they're a lot higher. It's around 75% profitable, and this one's close to it. So I mean, it's still looking quite good. Most of them are above the line though. Our beta. So this is how correlated we are to SPY. So if you have a beta of 1, you're exactly moving the way it's moving. So if it goes up 1%, you go up 1%. If you have a beta of 0 though, you're neutral. So you're not moving either way. And if you have a beta of -1, you would be going an inverse of SPY. So if it goes up, you go -1. So here you can see our beta is -166. So it's close to a double short of SPY, but it's not there yet. This beta though makes sense kind of because, I've been mostly bearish this time period, and that's where SPY has ended up falling quite a bit. So normally right now it's kind of biased in a negative way. If we would have maybe a bull market right now, then this would probably go up, maybe to -0.5 or something, where I'm trading a lot more bullish stuff. But I mean, at the moment, you can see I think in a bull period this would be around 166, and right now in the bear period it's -166. So this is kind of how much more we're risking. So the standard deviation is a lot greater, but our beta is, it's not as different. Or alpha, so this is really your return minus your beta times what the market returns. And so our betas, it's kind of in a way measuring how much more risk you're adding into SPY, right? So if you're -2 beta, you're moving 2x, -2x SPY. Right now our alpha, you want a positive alpha, and 0.27 is quite high. In my second performance review, it's around 0.05. My first performance one, I think it's around 0.25. So we have generated positive alpha both times. Also in the December time, also it was still positive. So we've always had a positive alpha, which is really good. Right now it's a 0.27. I think it's the highest it's been. So we have negative beta, so it's kind of harder to get positive alpha. But yeah, we're doing good. Over here, so this is the constant Sharpe ratio. So what I mean by constant is how, since the ratio from September to now, it's not a yearly Sharpe ratio, and right now it's a 0.96. If you look at SPYs though, it's -0.54. So the idea is that you want it to at least be neutral or positive, right? If you have it like that for the constant, then you're already doing really good. So I'm happy about that. Here we have the yearly Sharpe ratio. So here, right now it's 134. I think the first performance time was around 2.7, and SPY had something similar to that. And now that SPY is overall negative, it has a negative Sharpe ratio. And the Sharpe ratio is mostly just your return minus the bond's return divided by your standard deviations. So you wanna, it's kind of taking into account your standard deviation, so your risk. Right now 134, I mean, it's not bad. I'd say it's in the middle. It's not great, but it's not bad. It's neutral. It's good. But if you look at SPYs right now, it's -0.75. So anything above SPYs right now would be considered, I guess, good, because you're doing better than the market. Your risk and your returns are better. And right now SPYs at -0.75. So I think we're doing quite well. Over here, transactions. So a transaction would be like a buy. 2 buys would be 2 transactions. 2 sells, that's another 2. Right now it's around 1.8 a day. So, sometimes I would buy twice in a day, which, like, if I have a 60-40, right, I would buy the 40% and then the 60%. So that'd be 2 transactions. Sometimes I would just buy and sell. Really depends. So this is kind of like taking all those transactions into account. It's around 1.8. If we look at the mean, so this is the case where I would buy and then sell in the same day. Normally I just did this if I was not wanting to take an overnight risk. So it would be considered a day trade because I'm selling at the close, let's say. So I normally just did this to take off the risk overnight. But it's 0.6, so it's around 3 to 5. So most of the time I'm reconsidering trades each morning, right? So I have to think, okay, what are we gonna do? What am I gonna buy? And now I normally here I do that around three times out of the 5 a week. So most of the week I'm doing it. Okay, expectancy ratio. So this is just looking at your average win and then your profitable trades minus your average loss and your unprofitable trades. And you want this to be positive. If it's positive, the idea is that your strategy works in the long term. And at the moment, it's positive, which is quite good. I mean, there there are. It's not the greatest way to measure it, but I mean, it's a interesting way of because you're taking into account your mean gain times your profitable trade. So, and then you minus your other things. So we have it positive, which is good. Our alpha's positive. Our SPY sharp is outperforming by a lot. In the bull period for the sharp, it was the same. So that takes into account. So we're doing quite well on that. And then that was the last side. So overall, since end of September, we performed 32.123%. That is basically I think around 35% outperforming SPY. Really good. The first kind of quarter was just to see, okay, can I follow the bull market or an upward trend? Still resetting my trades and trading basically almost every day. Can I still follow it? And I did. Then from then to now, which it has fallen, which I wanted to have a bad period to show that, in the bad period, I can actually earn money. And that's what's happened. We did have that dip though. So I think if I don't go into those sectors and I stay to what I normally do, then we're fine. It's also important, like when I went back into the other sectors that I did and I regained most of the stuff, I think it would have been better not to have it, right? But at least having it there kind of just proved that the original strategy, it works really well, and it worked really well during that time period. I kind of got lucky in that it started to fall a lot when I went out of it. So that strategy just it kept on going up, right? And then now it's ended up 32%. If we wouldn't even have that dip, if I wouldn't even have got into the other sector, we could even be more, right? So at the moment, it's been working, I think, really well. I think I'm going to do one more quarter, or it's not even going to be a quarter, it's going to be like 2 months from now to June. And then I guess that's going to get added on. And then I'll probably do another one during the summer. And then we'll have a full year review. At the moment, for the next 2 weeks, I'm going to take a break. And, because it's 32% outperforming, I'm not worried about being underperforming, there's no risk. So I can just leave it because I'm doing so well. I'm just going to leave it. And then I'll come back to it. So during 2 weeks, it's just going to be a bunch of 0%. I won't be doing much. And then I'm going to get new funds to come in. And then I'll restart in around 2 weeks. So yeah. Thanks for watching, and see you in June, which is or end of May. All right, bye.